Hey all, Tom Weller here from forexreviews.info. First of all, I just wanted to say thanks for your purchase of the Engulfing Trader series. Before we begin getting into the series, going over the parts and how to trade the engulfing signal, I just wanted to go over a really quick tip, and that is identifying the major price action signals on the chart. Okay, so let's go over this. This is a little bit of basic PA work before we begin. Right, price action. With price action, there is actually 4 really powerful signals in the Forex market. And these signals work time and time again. For price action traders, or anyone that is getting into the price action trading arena, these signals should be, something that you get to know, become familiar with on the chart. And if you want to know about these signals, well, the first thing I want to say is these signals don't just appear on the chart every now and then. They're a constant appearance, and they signify, usually either short-term or long-term changes in the market. Right, so let's go over the 4 signals in detail. First of all, let's do the least important signal in price action. The least important price action signal is what I would call the doji candle. What the doji candle means is it just means that the buyers and sellers are sort of battling, and this is low volume. It usually is the significant candle in the relevance to possibly a change in the market. Now, I wouldn't use a doji candle just by itself. However, a doji candle can often be seen at the top of highs or at the bottom of lows. And with other price action or other aspects such as structure, it can be an added confluence to your trading strategy. So that's the first one. It's the doji. Right? The second type of candle that is important is a pattern that's called the railroad pattern. And it's usually where you get a significant bearish move or a significant bullish move, and at the top of that significant bullish move with a series of candles, you get a candle that is equal or a little bit less than the previous candle. And this is often called the railroad candle signal. And it's a very powerful reversal signal in the Forex market. Here's an example of it on the chart. The third type of signal, and I'm sure all of you guys have heard of it before because it's commonly said in many trading sites and many trading arenas for the price action traders, and that is called the pin bar. Now, the pin bar has often been referred to as, one of the magical candles in Forex. And yeah, it is definitely the second most important candle of all if you're a price action trader. However, even the pin bar needs some form of confluence in order to be traded successfully. What I mean by confluence is it needs to appear at maybe a structure point, or it needs to appear near a significant point on the charts, like such a structure, right? Or maybe trend structure, or maybe a trend line, or something similar. The pin bar, however, is one of the most powerful and popular signals that people refer to over and over and over again. Here's an example on the chart. The fourth signal, and you guys are, I'm sure you're waiting on it, is the engulfing candle. Now, this is one of the most powerful price action candles out there in the Forex market. In fact, in all markets completely. This candle does not really get that much media attention. It does not really get discussed too much. However, let me go over the benefits of understanding the engulfing candle. And here's an example on the chart. The engulfing candle needs little confluence. Therefore, it is the strongest candle in the price action arena. In order to be a good engulfing candle, it needs to break the low or break the high of the previous candle, and it needs to appear after a good move in one direction, and then the engulfing candle appears, giving a quality signal. Now, the engulfing candle can be traded in a trending market, in a consolidating market, a range-bound market, same as consolidation, right? And it can also be traded as a counter-trend trading method as well. Overall, the engulfing candle says a lot more than pretty much all the candles combined. And as we know in trading, and as you get more familiar with price action trading, you'll realize that every candle is telling a story in the Forex market. And the engulfing candle is telling an amazing story. It's saying, look at me, there is more buyers or there is more sellers in this candle. And it's also saying, look at me, this could possibly be a change in direction or give us a significant move. And oftentimes, traders will overlook this candle, especially if you've been a trader in the past that has been looking at indicators or relying on indicators for your trading. You can just scrap all them right now. The engulfing candle can change your life. Let's look at it from the perspective of the daily charts. Right, just for a moment. When the candles are going up on the daily charts, producing higher candles every single time, it isn't usually until you get one of two things. A nice pin bar with an engulfing candle, or just an engulfing candle breaking the low. That signifies a trend change. This is the reason that the engulfing candle is so significant, and is also the reason that I created the engulfing trader strategy. Now, if you're wondering, this is my core trading strategy that I use on a regular basis. Right? With this series, we focus on in 3 parts. First part going over identifying the strongest form of structure from the daily and weekly charts. The second part we go over identifying the signal at these points. And the third part we go over how to trade it. Alright, so let's begin. Okay, thanks for watching. Okay, before we go to the charts, what I'd first like to do is let's look over what structure is. Okay, it's one thing to understand that there is support and resistance in the Forex market. It's another to understand why it works and how it works. Okay, first of all, we're going to be focusing here in this video on daily support and resistance. Okay, now the main reason why in this strategy we focus on the daily support and resistance is because it's one of the most strongest forms of support and resistance in the Forex market. And so therefore it gives the highest level of probability. Right? Okay, so the most common question first. What is structure? What is support and resistance? First off, structure is the name given for where price may support or where price may resist. Structure is, you can use 2 different forms of the word when you're using structure. And you'll probably commonly, if you've been trading for a while, you'll commonly know these as support and resistance. All right, so this is a bit of basic, trading 101. Okay? Now, how they work and why they work, well, that's very simple. Daily support and resistance has a way of predicting what the banks and institutions are doing. Now, it doesn't mean it's going to work every single time. Okay? But the reason that support and resistance work in the first place is because they're areas where obviously the institutions or the banks are watching. And so once a support or resistance works one time, normally when price gets back to that support again, it can often work a second time. And this is partly because the institutions could be selling or buying again, or because a lot of the big traders are influencing the price around that zone. So that's where we go over understanding strong support and resistance, confirmed support and resistance, which is what we're going to be drawing on the chart once we go over this. And I'm going to show you step by step how to draw and how to identify these areas in a moment. Okay? Now, once again, the daily support and resistance is the strongest form of support and resistance in the Forex market, other than, of course, the weekly and monthly. Okay? Now, these levels are good areas to trade, whether you're trading on the 4 hour, the 1 hour, the 15-minute, or even the 5-minute. These areas are potential higher probability areas in order to take your trades. Now let's go over the average stats. Now we know that this is a way of predicting where institutions are buying and selling, and when price is coming up to these areas, we might have a possible resistance, or when price is coming down to these possible areas, we might have a possible support. Notice I say the word possible and probable, because Forex is a probability business. And what we want to be doing is we were looking for the best way to increase our probability in the trades. After all, the market works and moves over a number of different things. People buying, people selling, stop losses being hit, and people taking profit. Okay? And that's the main reason the market moves. However, every now and then, there's these big players that buy and sell. And that's what I commonly call, and what most people commonly call, support and resistance. And once, like I said, they've been identified, they become sort of like a self-fulfilling prophecy. Because everyone wants to go and sell there again. Or everyone wants to go and buy there again if price gets back there. Now here's the interesting thing. There is a difference between different levels of support and resistance. Some common things you want to be looking at is if you're waiting for it to get back to resistance again in a price move, you want to look at some common attributes. Firstly, you want price to fall at least 100 pips from a resistance zone, okay? If you want to confirm it as a resistance zone. It has to fall at least 100 pips or more. And I'm going to show you that on the charts as well once we get off this section. With a support zone, you want it to bounce more than 100 pips before you can say it's a valid support number as well. Okay? And also to make it even more valid, you want it to be a place where there has been multiple touches, which is what I'll show you in detail in a moment. Okay, so let me go over the two different sides of this. We have two different aspects. We have resistance and we have support. When price is moving down to a structure point, it's called support, right? Because we're expecting the market to support it. When price is moving up to a resistance zone, we're expecting prices to resist. Now, these are also importantly mentioned as zones. Now, the reason I use zone, the word zone, in these means, and other people like to call them resistance or support, is because you have to be aware that they have buffers on either side. And they can be 25, 30, even up to 50 pips on either side, depending on what sort of pair you are trading. Heck, if it's the really, really volatile pairs, the buffers can be as much as 100 pips on either side of the potential support zone and resistance zone. On very low volatility pairs, the support zones can have a buffer of about 25 to 30 pips. Right? Some examples of really extremely low volatility pairs, well, AUD-US, Euro-JAPY, Euro-GBP. Right? Okay, so let's get on with this. Right? More so Euro-GBP and AUD-US. Okay, that's another topic, right? Let's go over a bit of the stats for a moment. Okay, this is going off the daily charts. Okay, so I'm giving you some rough stats which you can work with. And it's just going to give you a little bit of edge, a little bit of understanding, a little bit of what to expect when price gets to these points, once you've drawn them in properly, which we'll go over in a moment. Okay, first off, the first stat is that over 70%, there'll be over 70% bounce of 45 to 60 pips at a strong recognized daily support and resistance zone. Okay, that's just the initial bounce. Right? As for another stat, there's over 65% will be a bounce of 60 to 120 pips. Now that can be a little bit more depending on the volatility of the pair. It can also be a little bit less depending on if it's a low volatility pair. There are variations between pairs. This is an average guide. And lastly, the last one, there's over 60% probability of a bounce of a major move. Now what do I mean by major move? Moving from a support zone or a resistance zone to the next major structure point. Like daily support and resistance to the next daily support and resistance. Right? And that's where we make the most amount of profit in the Forex market, is when those moves happen. However, when combined with the engulfing candle, it gives an extremely high probability trade. And that's a part that we're going to be going over in part 2 of the engulfing trader. In this video part, however, we're just going to be going over identifying structure. Right? Okay, so now that we've gone over that, you understand the basics of structure. And also understand this is a psychological area. Once the sellers, like as an example here, say price is coming up to a resistance zone, like here, and the sellers get in and the price moves down a good distance, a lot of the sellers that could not get in at the time up here get very jealous. And they basically get a bit, they get a bit like, if price gets back up there, I'm going to sell. Right? And when price gets back up there again, they sell. So it becomes a little bit of a self-fulfilling prophecy. And that's why often you'll get double taps or triple taps or even quadruple taps in the Forex market. Another common occurrence that happens at these zones is all those people that bought around the resistance zone and are not, and these are the sort of people that are not using good money management methods, and they hold onto their trade, and then finally price comes back up to this resistance zone, and they decide that, geez, holding that trade all in that negative drawdown was too much to bear, and they decide to dump it. And what happens when you close a buy trade? It's the same as selling. So that's another second part that becomes part of the self-fulfilling prophecy. And the same goes in the opposite way with the support zone. Alright, now that we've gone over that, let's jump over the charts and let me show you how to draw, and within a few steps, the daily support and resistance zones, which we'll be using in the engulfing trader strategy. Okay, let's go over the charts now. Okay, now that we're actually on the live charts, let's look and identify some strong daily support and resistance lines. Now this can be done in a couple of steps. So let's start step by step and go over a number of pairs. Okay? So to begin with, we're on the Euro-US daily. Now it doesn't really matter what pair it is. It's the same process for all pairs. Now, as I mentioned in the previous section, we like to trade off these zones. And so this is why this is an important aspect we want to go over first. Right? Okay, so let's begin. Now, I want to show you guys a trick first. Okay, so we're on the Euro-USD daily. What you want to do is you want to drop down to the line chart. And like I mentioned in the previous section, we want to be looking for multiple taps in certain zones. Okay, now, as long as there's more than 2 taps, it's a valid support and resistance zone from the daily. Okay? Now, this also, like I mentioned in the previous section, you can use this to trade on the lower time frames. You can use it to trade on the 15-minute. You can use it to trade on the 1 hour. You can use it to trade on the 4 hour. This just gives high probability trading zones. Right? Because these are common areas where the market moves in large... it's a common area where the market has major moves. It doesn't happen all the time, but there's a high probability that it will happen. Right? And that's all we're after. And like I said, when we're combining with the engulfing candle price action, right, with some good engulfing candle price action, this becomes an exceedingly high probability trade. However, we'll be going over that in part 2 and part 3. In part 3, we'll be going over how to trade it. In this video part, however, we just want to focus on identifying these spots on the chart and learning how to draw them. Now let's look at this for a moment. We had one hit here, we had a second hit here, we actually had 3 hits here, and we also had a third hit here. That makes this a valid daily support and resistance zone. So when price comes back to this zone, you can start to look for buy trades. When price is below and price comes up to it, you'll be looking for sell trades with price action. Okay, so let's draw in another one, right? Now, as you can see on the line chart, it gives some clear areas where these support and resistance zones are. Like I told you before in the previous part, just before we went to the charts, these are zones. They have buffers. All right? So it's not just a line. They can be as a buffer as much as 50 pips on either side. On volatile pairs, they can be even more. So while the market respects these structure points, they can push into them. Now, in a way of looking at the way that the market pushes into these zones, you can look at them like either a wall, okay, a hard wall, where we can sort of push into, but I like to look at them like a sponge or a trampoline. You know how like you got a trampoline and you can sort of push into it with your hand? That's sort of like what a support and resistance zone is. As you can see right here on the Euro US, price pushed into it and then bang, it bounced. Like a bouncy ball, right? However, sometimes they do get broken. And when they get broken, price often comes back to them and acts like support, as can be seen here on the Euro US, right where my cursor is. And so that makes this a very valid support and resistance zone. And these are also the only areas we want to trade because they're major moves. Let's have a look at this just for an example for major moves. Between here and here, 250 pips. Right? So if you get some nice bearish price action up here, chances are you're going to get at least a move of 250 pips. So this gives us something to work with. However, we'll go over that in part 2. Okay, in this video, let's just go over the step-by-step of how to draw them. Okay, so as you can see, we had 1, 2, 3 taps here. We also have, would you agree, a bit of a tap here. We have a 1 tap, but let's pull the chart back a bit. As you can see, a tap right here. You see that? 2 taps. And of course, this was the all-time high. Now, it is only 1 tap. But because it's the all-time high, you can still draw a structure point line there. Right? Okay, that's the exception of the rule for drawing daily support and resistance. Okay, so let's put it on the candle chart now, and we can see our trade areas, potential trade areas. So when price is coming up to here, we'd be looking for bearish price action. When price is coming down here to here, we'd be looking for bullish price action. Very simple logic. Right? And like I said, they are zones, and that's why the market sometimes pushes into these zones. As you can see here, here. And when the market, when the probability line's right and the trade goes your way, the profitability from trading from these zones is pretty much the highest form in the Forex market. Other than, of course, trading a higher time frame, like the weekly or the monthly. However, the daily is a good in-between time frame where it allows you can use these lines to trade the 4 hour, the 1 hour, the 30 minutes, the 15 minutes, or even lower. So as an example, when price comes down to here, you would know roughly the buffer of this zone. You could look for bullish price action around here. Okay, so that's it for the Euro US. Let's have a look at another pair. And let me just show you how simple this is to draw on any pair. Let's have a look at the US Swiss as the second option. Okay, so we're on the US Swiss. Like I said, one of the quickest ways is just to jump over the line chart. Now you will get better at lining these up without even jumping over the line chart. But to begin with, jumping over the line chart is a really easy way of identifying these levels. So we jump over the line chart, you can make it crystal clear. We had a support zone here, and we had a resistance zone here. Simple, yeah? So chances are when price comes up to here, we may get a bit of bearish price action, which is what it just did, and then the price goes down. Right? Now, this is a recent low, major low, so we can draw a line there. Right? We can also see an in-between line here where you could draw a secondary line. You could draw a secondary line here. However, as you can see, this line here is much more valid. You're looking for the major swing points. Here's another one. Look at this. This top here and this top here. So can we draw a line there? Yes, we can. We'll just draw it like that. Now we had 1, 2, 3 touches here. They're not exact. Remember, there are zones. And if you pull the chart back, you can see how they lined up in the past as well. Okay, so now once you've drawn the zones like that on the this is the US Swiss daily, you put it on your candlestick charts, and you've got your areas in order to look for trades. Right? And sometimes you might notice little areas that you've missed when you go back to the candles, and that's okay. You can zoom in or zoom out, and you can draw them in as well. The line chart just gives you that added benefit of looking and seeing the points quite easily on the charts. And as you can see, giving you some good sell zones and some good buy zones back here in the past, and a recent sell zone just here. Okay, it did, however, break above, which is where you want to be wait and be a bit patient. However, it did break below, as you can see, with this nice bearish engulfing candle here, and then the market went down. And sometimes, like I said, these are zones, so you can line them up much more neatly, like so. Okay, and like they said, they can have up to a 50 pip buffer around them. You know, on low volatility pairs like the US dollar Swiss, you could just see them as 25 pips on either side of the support and resistance zone. So like this, right? Okay, the support and resistance is really like 91 cents and 60 cents, 91.60, but you could see it as 25 pips on either side. Okay, and that's just an example. There is variations depending on each pair, and these are averages. You'll get used to that more and more as you trade different pairs, and just learn. To begin with, what I recommend is when you're learning this strategy, just start with a few pairs. Just keep it simple, and then as you build confidence with the strategy, you can move on, and you can basically, in the end, you'll be able to trade any pair like a whiz, and you'll be able to see these variations on different charts depending on how volatile the pair is. Now, if you're wondering what I mean by volatile, volatile just means that the pair moves more than the average pair, right? Less volatile means it moves small amount, less than the average pair. Okay, so let's move on, okay? All right, so GBP US. Now let's just get into these steps. So first of all, we just jump into the line chart, and we look for multiple points. We had 1, 2, 3 here. That makes that valid. We draw a line here, 1, 2 here. This was also a valid daily resistance point from way back here, as you can see, right? We also draw a line here. As you can see, sometimes they're not perfect. Sometimes they don't line up perfectly. And these are what the line chart does is it just sort of gives you the close, the average close. So the candles will flick through these, right? The body close. So here we go. We've got a bit of a choppy spot here, but we do have a bit of a bottom. You could say this is probably the best spot here, right? And we did have an in-between zone right here. And see, look at that. Nice and clean cut, easy to see. Easy to see that these are major move areas, and let's jump over the candles. And they gave some nice trading areas as the market keeps moving along. And so now if price comes up to here, we can look for a bearish sell signal. If price comes down to here, we can look for a bullish price action signal. And in between, we don't have to do anything. We can wait for these high probability setups to appear. And the beauty of it is there are so many Forex charts out there, there's always going to be a setup around the corner waiting to appear. All right? So you wait for the trade to come to you. You do not chase the trade. And that's how you trade the engulfing trader strategy. Okay, so let's go on to the next pair. Right, so quickly what we do is we jump over the line chart. We look for multiple taps. This is the New Zealand US daily. Like I said, it doesn't really matter what pair it is though. We're just looking, so we've got 2 taps here, well actually 3, look, 1, 2, 3. We also got a midway tap right here. This looks like it was the recent high, but also, we pull that up a little bit like here, you can see that we had a high here. So this is a bit of a high zone. Okay, we can, and like when we go back to the candles, you can see exactly where the pins come up to, and you can see that this is a resistance zone over here too. Now we had 3 taps here, and 2 taps here. Now, before I finish this drawing and lining up the chart on this pair, I just wanted to say something before we go on and do the next chart. And that is, if you draw the support and resistance wrong, it can be very costly. And so this is a very important element to master. And that's the reason I'm going to keep repeating myself in this video about lining up these sections. Mastering this section can be the difference between making good profit in the Forex market, average profit in the Forex market, to exceedingly high profit in the Forex market. Let's look at some recent moves and you'll see what I'm talking about. Right? We had a defined resistance zone here. Right? Price came up, confirmed as resistance, went down. So when price came back up here and gave some nice bearish signals, price went down, right? Now, how far did that go down from this resistance zone, this daily resistance zone? 300 pips. We then got a nice bearish engulfing here, which is a A-grade trade, by the way, if you're looking for an engulfing candle. This is an A-grade engulfing candle. I'll zoom in so you can see it in detail. And then the price broke below and went down 320 pips with a possible exit around here or here, around 200 pips. Okay, and we'll go over that in part 2 and part 3, how to look for these high probability trades. But here's a perfect example of one right here, just as a teaser. Right? Now, if you're not getting more than 200, 250 pips from an average trade in the Forex market, then this strategy, you're going to love this strategy. Right? If you're not getting more than 100 pips, 150 pips, if those sort of amounts look really crazy high to you, you're going to love this strategy. Because this helps us identify major moves in the Forex market. Right? Alright. So let's move along. So we drew the lines on the New Zealand US. Let's go on to, let's draw them on the AUD US daily as well. Okay? So we've gone through this is our 5th pair that we've gone through. What I'll do is I'll go through all the pairs that I've got down here so you can get a complete idea. You know, it doesn't take long. Let's draw this in. So we had 1 tap here, 1 tap here, 1 tap here, and 1 tap here, and 1 tap here. So this is a really good resistance when it was below it, and support when it was on top. Simple, yeah? And that's what commonly happens. When price breaks above resistance, it comes back and tests it as support. And so when it broke above and price came up to here, you'd be looking to buy around here. Okay? And so that's what, like I keep saying, when price is above and has moved a decent period above, and then it comes back to test that resistance, it becomes support. Now that is not the case when it just moves a little bit above, right? And you'll see that in part 2 as well, right? But that's one thing you need to understand about structure. Price needs to move a good distance before it comes back, before it bounces as support. Otherwise, it could just be a fake break, and then you end up buying, and then the market pulls back in as a resistance. Alright, so let's draw in the rest of these points. Nice support and resistance, double bottom, or double tap. Nice, yeah? As you can see, these are nice structure plays. Let's have a look at this from the bottom. 360 pips. Not bad, yeah? Okay, so this is another major support and resistance, as you can see, here, here, and here. Now, because this is a 1 tap, but it is the high, we can draw it in as well. And if you look left, we do have a couple of points in the market to the left. So that was a significant number, around 97 on the AUD pair. Now let's put it back on the candles and we'll see it in detail. Now look at that. Bravo. So now we know that when price comes down to here, if we get some nice bullish price action, this will be, and we'll go over that in part 2, distinguishing a really good engulfing candle from the rest. Well, if you take that trade, you can get high reward by allowing it to run up to the next structure. I actually have a money management system we'll be going over in part 3, where you enter 2 trades. Okay, just in this video part, we just want to focus on structure. And I'd really like you guys, if this is the first time you're getting used to structure, and if this is not fully clicking, then I highly recommend jumping over the charts and just going through the steps. And it'll just start to pop out at you. Right? So let's go on to the next pair. GBP New Zealand. Okay? So let's put it on, let's go through the steps again. Put it on the line chart. Right? And once you get experience with this, you won't have to put on the line chart. The line chart just gives you a little bit of clarity. You're looking for the major moves. Okay, there you go. Bing, 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 bing. 4 touches. So what is this? This is a strong, when its price is above, it's a strong support. What's this? When price is below it, strong resistance. Okay, and now sometimes in the Forex market, you get these choppy in-between zones, like say here, and here, and here. I'm going to leave that up to you whether you want to add them to the chart. But as a personal preference, you're better off focusing not on choppy choppy zones. You want to be looking at these clear points. Now let's go back to the candlestick chart and you'll see what I'm talking about. This is very clear. This is clear, and this is clear. This one being a little bit higher than this one, it's not so clear. Yeah, the price could turn around there. You could argue that there's a point here. But like I said, there's a little bit of variation between the 2 points. Now look at the tops here. Not much variation, yeah? So you can understand your risk to reward aspect, and you know that if you get a nice bearish price action up here, it may go all the way down, giving you high potential for a good risk to reward. And these can sometimes be 3 to 1s or even 4 to 1s. I mean 4 times the risk or 3 times the risk. And they're the sort of trades that build your account. Sometimes it can be more. And this is a very, big moving pair. Let's as an example, let's just look at one signal right here. You see, you got this nice engulfing right here. Engulfs all these previous candles right here to the left. Let's zoom in. Right here. And then after the signal, right, price went down before it started getting any decent bullish candle to get out. For 570 pips, as an exit, you probably get out about 420. The exit meaning allowing the trade to run, and then it telling you to get out, which is just above here, 420 pips. But the potential reward on this trade was over 600 pips. Okay, so let's move on to the next chart. Okay, so you can see some nice clear structure, support and resistance. Okay, now let's move on to the Euro AD. Okay, so let's go through the steps again. Now this just looks like a normal price chart, right? Let's go through the steps. Let's change it. Let's put on the line chart. Now let's look for multiple taps. Okay, so we have multiple taps here. Bing, 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 bing. Oh, okay. 2 taps. Right, and because this was the first initial high and price fell down a lot, that means that we could look for sell signals here on the second tap, because it was the all-time high, recent high. And that, like I said, that's the exception to the rule. And these are great selling opportunities when you get an extreme high, major resistance fall, then price comes back up to it, and then gives a major resistance fall once again. These happen very commonly in the Forex market. Okay, so this is a bottom area. As you can see, tap, 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 and tap, even underneath. Okay, so now let's look at it on with the line chart off. We're on the candles now. Now, can you see some clear trading opportunity areas on the chart? And sort of the trading opportunity areas as well, you want to look at, these are the highest probability areas to take trades. And like I mentioned in the previous section in this video, this is where commonly institutions and banks either sell or they buy. And that's all you need to know, is we're trying to jump on the chart. We're trying to trade along with these guys as well. And we're looking for the highest probability trade in order to reflect our risk reward. Because if we're going to risk 80 to 100 pips on a trade, we want to know that the reward potential can be at least 2 or more than the risk. And that's a simple way of looking at it, because not every trade is going to be a winner. So if we can get 2 or more or 3 or more than the risk on some trades, that's going to protect our account, and that's going to build our equity. And we'll go over that in part 2 and part 3, like I keep saying. Okay, so let's go on to the next chart. So this was the Euro AUD daily. Let's go on to the Euro New Zealand daily. And like I said, sometimes pairs are a little bit choppy. And when they're a little bit choppy around a support and resistance zone, just don't trade that support and resistance zone. It's as simple as that. Keep it simple. Right, when you see a clear place, okay, this is a bit clearer, this top up here. We also had a bit of a bottom area here, but as you can see, we got these big breakthroughs. Okay, but we did have a nice support and resistance right here. Yeah, bing, bing, bing. And then look at this clear bottom here. Nice clear bottom. So certain parts clear, certain parts not so clear. I recommend just looking at the clear points in the chart when you're looking for trades. Okay? Like as an example, if we got some bearish price action right here in the past, which we didn't, okay, then this would have been a clear sell opportunity area. Okay? But it was a clear sell opportunity area here, wasn't it? Yeah? And just like when price kept coming up to this place and resisting and giving nice sell opportunities down to here, this also became a high probability buy area going up as well. And as you can see, the risk to the potential reward lines up nicely. And that's what you need in nearly every trade. Whether you're trading on the 1 hour, the 4 hour, or the 30 minute, or the 15 minute. If you're slowly losing money in your Forex trading, then it's most likely because your risk to reward is not aligning to your probability of winning. Okay? And that's where this strategy can help immensely. Okay, let's go on to the next pair, which is the GBP/AUD. Now, like I said before in the previous section, you can use these on any time frame. And in the Engulfing Trader Strategy series, we'll be going over many different time frames as examples. So, you know, if you're wondering, oh, how do I trade this on the 1 hour? Don't worry, there's a video on that as well. Okay, I go over every time frame as an example in this pack. Okay, so I started drawing them without the lines. So let's go back to the basics again. Line chart. Now we see some areas popping out at us, don't we? Bing, 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 bing. Yeah? And we even have a little area in between here. It's like a little mini area. Yeah? So let's go look at try and see if that's the case. Yes, it is. Look, because it's here, it's here, it's here, it's here. These were resistance areas. Then finally it broke through. And so when price came down, so this is a bit of a tight, support and resistance area in here. As you can see, this gave some really nice sell opportunities up here. And it gave a really good buy opportunity around here. If you got a buy opportunity, didn't get it that time. However, we did get some buy opportunities in here. And sometimes you don't get the perfectest candles, and on the time frame that you're trading. But you might find that there is a beautiful candle on the 4 hour or the 1 hour. And like I said, you can trade this on multiple time frames. Right? You don't have to be limited. This strategy is not limited. But you can also just trade it on the daily charts. And there is a really big benefit of trading this on the daily charts. It means that you only have to check the charts once a day. And that's a really, less stressful for a lot of people, especially people that are really, really busy with their trading. They only have to check the charts once a day. It might be before work. If you're a working person, you don't have time at home. And then the next day you can come and check your trade and, see how much it's in profit, or see if it's, still just sort of ebbing and flowing, or see if you've just taken a loss. I mean, there's two things that can happen in a trade. You can either go mega into the profit, or, you can take a loss, or you can get to your break-even point and you can manage the trade as it goes more into the profit zone. Okay, so that's really three things. We'll go over that in part 3. Okay. So yeah, that's the GBP/AUD with the support and resistance lines. Okay, so now I'm on the US CAD daily. Let's go to step one. Drop back to the line chart, right? And we can draw in these major swing points where it's tapped more than multiple times. Look at this, tap here, tap here, tap here, tap here. This is a very important zone. Now we have one area where it looks like price came to just recently. Look at that. Around here, see tap here, tap here, tap here. And remember, these are zones. So sometimes it looks like the taps aren't exactly off, but that's okay. Okay? Because they're zones. Okay? So you could almost imagine them like this. And this may help you if you're just trying to get used to the concept of them zones, like that. That's your potential risk zone. This is where it's bouncing, like the trampoline, like I mentioned just before. You know, price pushes in, bang, and bounces off. And so this was just recently a buy situation with this pair. Now let's jump over the candles and see if we've got a buy candle there. And look at that. Nice bit of buy price action right here. In fact, we've gotten some buy price action every single time it's come back to this point, and it looks like price might push up and come back up to this previous structure, resistance, up here. If you look here, hits the structure point, which was previously resistance, now becoming support. Yeah? Okay, so let's move on to the last two pairs. Okay, so this is gold daily. And this is a common pair that a lot of people trade. So it doesn't really matter whether it's gold or it's Forex or even if it's stocks. You know, you can draw this on any chart. You know, it could be the S&P 500. It doesn't matter what it is. Okay, structure is always on charts because it's the emotional, it's the way of reading, you know, the institutions buying and selling, but it's also a way of reading emotional response of traders, fear, greed. Yeah. So let's have a look at these. We got some nice double taps here. We also had a nice few taps here on this pair, and we had one major low where price came down. So we can have one right here. So let's go back to the candles now. As you can see, nice and clear. Buying area, buying area, buying area, selling area. If you get some price action, as you can see, sometimes they don't line up exactly because the line chart is just looking at average closes. And so you can line up these areas. Well, let's pull this down a bit further. We can even pull it down to there. See, bing, bing, bing. And so when price gets up this line, it gets a nice bearish candle, price goes down. Usually. And that's the probability we're looking at. Okay? Look at this. Major resistance over here. When price finally got up to it, months and months later, bearish engulfing just after this pin bar, and then price went down. Went down to the, well, broke through the next structure, this structure here. Didn't give any good price action to buy, broke through, and almost got to the next structure, which was right down here. And then eventually it did. And look at that. And then when it got to here, we got some bullish price action, and price went back up to the next what? Structure. And then it went back down again. So you can see how these daily structure points act like, it's almost like a tennis racket, like whack, 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 whack. Sometimes they push through. They need a lot of effort to push through. Like as an example, when they push through, they have to use a lot of strength. As an example in this candle right here. You know, and this candle right here. And then this candle right here, and this candle right here. But often, they'll act as bouncing areas, like a trampoline. Alright, let's go on to the last pair. And you guys should be now getting an idea of how to draw support and resistance, like daily support and resistance, using step one, which is chuck it onto the line chart. Let's go through this once more. Line chart. We had a high here. Right. We also had a bottom here. This is like an all-time bottom. We also had an in-between zone like here. Yeah, now we can drop. I can see some areas here too, like so. Let's have a look at that. Yeah, it's more like that. We'll just clean this up a little bit, and like that. Right? Oh, you could even argue that that's a little bit like that. Like I said, there's zones, right? And this one here is actually a lot lower. It's like here. Okay, so sometimes you get overextensions of these areas. As you can see, support, 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 support. When finally it broke back through it over here, it became resistance. And then it broke through, tried to go higher, but it couldn't do it. And then broke below, giving a nice sell opportunity for the bears, and price went down. Okay, so now you guys should be getting familiar with drawing your own daily support and resistance. Right? And we've just gone over all the aspects, why this is a high probability area. And you can see it on the chart, the major moves that happened between these two zones. And you now understand that these are zones as well. And these are also areas that we're going to be looking at in part 2 and in part 3 of this video series for looking for high probability trades. And there's a certain type of candle in the Forex market that, we're going to be looking at, in part 2 in detail and identifying that. Right, and that's the engulfing candle. Okay, so if you haven't done so yet, right, and you haven't paused this video just yet, I recommend, when you finish watching this video, which will just end up in a moment, is I want you to jump on the charts, one of your favorite pairs, whatever it is, put it on the line chart, and then start drawing in these major moves. Just looking for the major, where it's hitting multiple times. Like I said, 2 or more times unless it's a high. Then you can draw it in. Yeah? Or it's a low. It can be just a one tap, as you can see. Let me put that on again. One tap here. Okay? And as you can see, we've got one tap here. So when price came up here, gave a bearish signal, gave a really good signal to sell on the second tap. Right? Okay, so that's it on structure. In part 2, we'll be going over looking for the engulfing candle at these points on the chart. Well, thanks for watching and happy trading.